The Adani Group, a name synonymous with ambition, infrastructure, and now controversy. Gautam Adani, once hailed as India's rising star, faces serious allegations. Market manipulation, inflated stock prices. The accusations are troubling. The potential consequences are even more so. This isn't just about one company or one individual. It's about the integrity of our markets. It's about the trust investors place in our system. When that trust is shaken, the entire edifice can crumble. The Adani saga raises uncomfortable questions. Are our markets truly free and fair? Or are they vulnerable to manipulation by powerful players? These are not questions we can afford to ignore. The answers have far-reaching implications for our economy and our future.
The allegations against the Adani Group are complex. They involve intricate financial transactions, offshore entities, and opaque accounting practices. But the core issue is simple: artificially inflating stock prices. Think of it like a house of cards. The price of Adani stocks, it is alleged, was propped up through a series of dubious maneuvers. Shell companies, perhaps even heavyweight allies like Reliance, HDFC, and ICICI, may have been used. These manipulations create a mirage of success, a facade that masks the underlying fragility. But like any house of cards, the structure is inherently unstable. A slight breeze, a whisper of doubt can bring the whole thing crashing down. This is precisely what happened when Hindenburg Research, a short-selling firm, released its explosive report. The report, like a gust of wind, exposed the alleged manipulation.
The fallout from the Adani controversy has been significant. Stock prices plummeted. Investors, both domestic and foreign, are wary. The reputation of India's market, carefully built over decades, has been tarnished. This is about more than just money. It's about trust. Investors need to believe that the market is a level playing field. They need to know that prices reflect genuine value, not artificial manipulation. When that trust is broken, the consequences are dire. Imagine a farmer who invests his life savings in a company only to see its value plummet due to market manipulation. Imagine a pensioner whose retirement fund is decimated by the actions of unscrupulous actors. These are not just hypothetical scenarios, they are the real-life consequences of market manipulation.
The Adani controversy, with its allegations of crony capitalism and market manipulation, evokes an uncomfortable parallel. The East India Company, once a trading behemoth, rose to control vast swathes of India. Its methods were ruthless, its practices exploitative. The company, through its monopoly and political influence, distorted markets, crippled local industries, and enriched a select few at the expense of millions. While the contexts are different, the underlying theme remains the same. Unchecked power, whether political or economic, can have devastating consequences. The Adani controversy, in a way, serves as a stark reminder of the dangers of unchecked corporate power. It highlights the need for robust regulations, a vigilant media, and an active citizenry to ensure that history does not repeat itself. The stakes are simply too high to allow for complacency.
The Adani controversy isn't an isolated incident. It's a symptom of a larger malaise, a systemic rot that threatens the very foundations of our economy. When market integrity is compromised, the consequences are far-reaching. It erodes investor confidence, making it difficult for businesses to raise capital and grow. It exacerbates economic inequality, as the wealthy and well-connected benefit at the expense of ordinary citizens. It undermines the very fabric of our democracy, as questions arise about the undue influence of powerful corporations. We are at a crossroads. The path we choose now will determine the kind of economy and society we build for ourselves and for future generations. We can choose to ignore the warning signs, to sweep the Adani controversy under the rug. Or we can choose to confront the rot, to demand accountability, and to build a system that works for everyone, not just a privileged few.
The Adani controversy is a wake-up call, a clarion call for change. It is a call for greater transparency in corporate governance. It is a call for stricter regulations and more robust enforcement mechanisms. It is a call for a more vigilant media and a more engaged citizenry. We need to demand accountability from our institutions, from our regulators, and from our elected officials. We need to foster a culture of ethics and integrity in our businesses and in our markets. The task ahead is not easy, but the stakes are too high to ignore. The future of our economy, the well-being of our people, and the very soul of our nation depend on the choices we make today. Let us choose wisely. Let us choose to build a just and equitable society, a society where markets serve the people, not the other way around.